I want to tell you about a man who collected rent, paid his workers, and genuinely tried to pay his taxes. But he still ended up facing 170 million tax demand from KRA. And he was facing this not because he was dishonest, but because his way of record keeping was very informal. In Kenya, thousands of landlords operate the way John Kinuthia Makumi did. You collect rent in cash, but once you collect this rent in cash, you then go ahead and make payments in cash. You will pay the caretaker in cash via M-Pesa, you pay the cleaner via M-Pesa, you pay the guard via M-Pesa. If there are repairs that needs to be done for that house, you pay the hardware in cash, you pay the electrician in cash, you pay the plumber in cash. So you end up making all your payments in cash. But when KRA comes calling, they won't be able to see all those expenses that you've paid. And this story is one story that you need to learn from, because what happened to John Makumi can ultimately happen to you. And here's what makes this case particularly difficult to tell. The Tax Appeals Tribunal had John's case, and the tribunal said that they sympathize with him because he was elderly, he was sick, and he was just a normal man trying to run his small property business. In the tribunal's heart, they felt for him, but the law is the law. Because what happened? The tribunal upheld most of the 170 million that was being demanded by KRA illegally. Because even though the tribunal is sympathetic, sympathy is not evidence. And in a tax dispute, the evidence that you're bringing to the table is everything. Let's get into the story. By the end of this video, you will understand exactly what KRA can do when a landlord does not show up when called to KRA for an interview. I'll tell you how KRA can go directly to your tenants and ask the tenants the amount of rental income they pay. And I'll also let you know the specific records that you as a landlord need to maintain to protect yourselves when KRA comes, because this is the information that John did not have. The story starts with John Kinuthia. Now, John Kinuthia was a very elderly man, and he owned several rental properties in and around Nairobi. John collected rent, he paid his workers in cash, and he believed that he was managing his tax obligations correctly. But then, in 2024, KRA sent him a bill of 170 million. When John saw that letter, he was stunned, because according to him, he had filed his returns, he had paid the tax that was due. So according to him, how could he possibly owe all those millions to KRA? Now, the trouble began when tax officials visited Makumi to do an interview to review his rental income from the year 2010 to 2014. When Makumi was invited for the interview, he never showed up. His explanation later was painfully human. He said he was old, he was sick, and simply he could not manage to get to the meeting. But KRA saw this differently. They suspected that John was concealing something. So what KRA did is they exercised their legal power to go directly to John's tenants and ask each of the tenants how much they pay in rent. From those tenant interviews, KRA built their own estimate of the total income that John had been getting from all his properties. So they took it, they added the penalties, they also added interest on the penalties. The numbers continued growing until the total request from KRA was 170 million. When John finally fought back before the Tax Appeals Tribunal, his defense was very heartbreaking. He explained that most of his transactions were in cash. Also, he explained that he had hired local handymen, like the casual laborers, who never gave him any receipts, so he's not able to provide evidence of expenses. He also said he was paying cleaners or security guards from his pocket, and at the same time, they did not give him any proof that he has paid. Most heartbreakingly, he said he had been unwell for years, and because he had been unwell, he could not keep proper records. John explained that he had even tried to involve his wife and his son in managing the business, and he also had expenses from his car. But KRA only allowed him to claim one car as a business expense. Now, for John, Everywhere he turned, his informal way of doing business was coming back to hurt him. And before I tell you what the tribunal decided, if you are there and you are landlord and you need help in managing your rental property or paying your taxes, we provide exactly that kind of support. Let's go back to the tribunal. Now, here we are at the tribunal. So the tribunal was very sympathetic. The tribunal listened to John. They also listened to the case from KRA. And from the tribunal's own words, they clearly were sympathetic to John. They acknowledged that John had health problems. They also acknowledged from his age, maybe he couldn't keep the right records. They also identified that John had been very genuine in his attempt to manage his properties and pay taxes. On all these counts, the tribunal really sympathized with John. But then they pointed to the basic rule of tax law, and that rule exists in virtually every country in the world. The burden of proof always rests with the taxpayer. If you claim an expense, you must be able to provide the right documentation to prove that you actually incurred that expense. If you say a tax assessment is wrong, then you must prove using your own records. You must find a way to prove that that assessment is wrong. But John had almost nothing. Most of the expenses that John was claiming, let's say repairs, salaries, payment for utilities, for all these, John lacked the proper documentation. KRA, by contrast, had statements from John's tenants around the actual amount that they were paying as rent. But the tribunal gave John a small victory. They allowed him to deduct around 14.8 million of expenses that he could partly prove. Some payment for water, payment for security, and then the tribunal reduced the demand accordingly. But the rest of the massive tax assessment was confirmed. John had to pay all this amount plus interest and penalties. The judges wrote one line that captures the entire tragedy of this case. The tribunal said it sympathizes with the appellant, but in the absence of proper documentation, one is left without a choice but to rely on the findings that have been presented. That is why John lost most of the case, not because John was dishonest, no, but because he had no paper to show for all those years of legitimate business expenses. If you're a landlord in Kenya, here's the truth and what this case means for you. First, KRA has the power to interview your tenants and use this information to estimate your rental income. Secondly, if you miss a meeting with KRA, they will proceed to make an assessment without you, and their estimates will not be kind to you. Third, if you cannot produce documentation for the expenses that you are claiming, those expenses do not exist in the eyes of the law, regardless of whether they were real or not. So every payment that you make sure you are getting a receipt for it. Every repair, every cleaning, every security payment, every maintenance cost, make sure you are asking for receipts, even from the casual worker who you are paying for. Whenever a plumber comes and fixes your pipes, make sure you are keeping those receipts because you never know when you are going to need them. And currently, make sure you are asking for items invoices from every supplier that you are using in case you want to be on the right path with KRA. Once you collect all these, keep records. Also, keep records of what every tenant is paying to you. And once you have all these records, make sure you get an accountant or someone with simple accounting knowledge to help you submit your taxes and submit your taxes on time. On this video, check the description. I've put 2 links on the kind of taxes you need to be paying as a landlord. If some of your family members are helping you in the business, put that arrangement in writing. Pay these people using a verifiable system. And if you followed what I've said, none of these things are complicated. A landlord managing, let's say, 5 rental units, you can build a filing system in one single afternoon, and that filing system could have changed the outcome of Jones Makumi's case and change it entirely. That cost of an afternoon is more valuable than the 170 million that was demanded from John. And if KRA ever invites you for an interview about your rental income, please attend. If you cannot attend because of health or other reasons, communicate that in writing before the appointment date, and you can request KRA to reschedule. Do not allow KRA to proceed in your absence when your presence might have changed the conclusions that the taxman would have arrived at. If you are a landlord who has been operating informally and you want to understand your current tax position and how you can protect yourself going forward, give us a call. We help landlords with rental properties and property owners understand their tax obligation, organize their records, and deal with whatever KRA throws at them. And in the next video, I'm going to tell you about a construction company director who did not just fail to keep records as John did. So this director fails to keep records entirely. He then ignored demands by KRA. He also filed nil returns. And as he is filing nil returns, he is also claiming tax credits. And once he did all this, he withdrew company money for himself. He gave some of that money to his children, and he did this without accounting for anything at all. And this person had the audacity to go to the Tax Appeals Tribunal when an assessment was done on him. But he lost, and he lost in the most complete way possible. So watch that story next.